I'm Ashley Redmond from Morningstar.ca, and I'm here with Bob Johnson, Director of Economic Analysis. Bob, thanks so much for joining me.
Great to be here today.
So when we reflect back on 2013, it was a little uglier than we expected, with some small bumps along the way and some larger ones like the shutdown of the U.S. government. So putting that behind us, when we look ahead to 2014, what should investors expect?
Sure. Well, to set the stage a little bit, let's talk about 2013 just a little bit. The economy grew, depending on which metric you used, 1.9% year over year for the whole year average together. In the fourth quarter to fourth quarter, it did a little better, 2.5%. So it came in, I said there'd be 2 to 2.5% growth in 2013, and that's pretty much where we came out. And it was a recovery pretty much driven by consumer spending, particularly on autos and on residential housing spending. Those were really the two really strong points. Exports weren't bad, and kind of missing in action. Usually you see in a decent recovery is an improvement in business spending, and it really wasn't a very big contributor last year. And also unusual is government was actually a subtraction from the gross domestic product calculation this time around. It shrank by about 2% in 2013. That'll be important when we talk here now a little bit about 2014. I think we'll grow that same 2 to 2.5%. I didn't lose my notes. We are actually growing for several years in a row at kind of that same 2 to 2.5% growth rate. And I think the consumer might be roughly the same, maybe just a little less. I think the housing growth will be a little less. Auto growth will be a little less, but government will be a little bit better than it was last year. And exports, I think, will stay about the same, but still a very nice positive contributor. So I'm overall optimistic about 2014. I'm considerably below where other experts are on the economy right now. I just don't think people are considering that housing is going to be relatively flat, especially on the existing home sales basis in 2014.
Okay, so now we're halfway through February of 2014, and how do you feel about the numbers so far? Because I know the jobs data was a little weak along with the manufacturing and the auto, so how do you feel right now?
Sure. All of the categories have been softer than I would like in the last 2 months, 2 to 3 months. I'll even widen it out a little bit. This morning we got some news on retail sales that looked a little bit soft, and now we've got kind of 3 months in a row with basically no growth in retail sales. And we didn't think that before. There were some major revisions to the data. And so now retail sales, which I think is a key driver in the economy, now looks very weak. But it's hard to gauge how much is weather and how much isn't. Weather in the central United States and northeastern United States has been incredibly rough winter. I mean, the worst winter in like 35 years. So it does have some impact on the numbers. Although I do caution, for every good thing, there's a bad thing in the weather data. The oil sales are, utility sales are way up because everybody's using more electricity and gas. So that helps some things. Snow boots, you can't find any right now. Coats, winter coats are gone off the racks. So there's some categories that benefit. Building materials was exceptionally strong. Snowblowers, salt, shovels. So it's not all bad news. So when people say, oh, you just throw the data out, it's all weather. I don't think that's true, and the data's been soft. As you mentioned, it's also employment, and there's several other categories that have been weak as well. We'll see industrial production very shortly, see if that's kind of contributes to the weakness as well. So we've had softness across several categories, and I think we've gotten the year off to a slow start. And the people that thought we were going to have a rocket ship in 2013 or 2014 are probably kicking themselves right now.
Okay, when you look at 2014, you said you were a little below most experts. You're a little bit more bearish right now.
Yeah.
So what's the biggest roadblock for the U.S. in 2014?
Well, there's several of them out there. I mean, the one that nobody talks about that's really been holding back the housing is, although rates have been incredibly cheap, it's still been incredibly difficult to get a mortgage loan. In fact, the credit score that you need for a mortgage today to get a mortgage is about the same as it was in the middle of the credit crisis. It has not eased up. And that's kept a lot of pressure on the housing market. And so I think the availability of credit is actually one of the things that is holding things back. And you can see how effective credit can be because credit is widely available in the auto industry because nobody wants to lose their autos. There's almost no repossessions of autos these days. So that there's a real and that's because now there's that free-flowing credit. It means a lot of auto sales, and it's been the real bright story of the economy. So I think that's one of the real obstacles is that. I also think there's a number of really small ones, but you've got the food stamps program being reduced. You've got no more payment of 99 weeks of unemployment. It's cut way back. You have these utility bills, which are going through the roof. That means you're not going to be able to spend money on other things because you're going to have these big gas and electricity bills to pay. So there's a number of headwinds for the consumer ahead here, but I think probably the biggest one is really still the credit issue.
Okay. And Bob, when I talk to different economists, it seems that everyone has different sectors that they prefer or they favor to really get the true state of the economy, because sometimes we think the number is a little skewed from the government and from other sources. So my question is, what sectors do you prefer or favor to find the true value of the economy?
I like to look at the retail sales data. I do look at the government version, which we got this morning, which I mentioned were weak, but I also check the weekly chain store sales. I think that's a great source of data. The overall trend is down as more and more people use Amazon.com, but I can see in monthly patterns what's happening. And clearly we have a week of good weather and things are a little better, and we have a bad week of weather and things are a little worse. So that's what the data is showing right now, but it's generally not so good trend line in retail. So that's one of my very favorites to watch, and that's kind of a real short-term indicator. Auto sales are my one that I really, really like to watch because it's one of those things where it requires some confidence in your job and that things are going to be improving, but it's not the monumental thing where you have to save for years like you might for a house, so you can react a little bit more quickly. So I use that one, and unfortunately that's been down 2 months in a row now. That's been one of the most disappointing indicators. And it is a piece of government data, but I do like to look at housing starts because it drives so much of the economy, and I think that's another piece of data that I really look at.
Great. Thanks so much, Bob.
Thank you.
To get more markets commentary, go to the markets section of Morningstar.ca.